Hello guys, welcome back to T2SMC Trader. How are you all? I hope that everyone is cool. It's a happy birthday to T2 Wizard. This is my birthday actually. Thank you so much to all of you guys to wish me happy birthday to my Twitter and both of my YouTube channel. How are you all? By the way, good morning, good afternoon, good evening to all of you. If there is any issues for listening, if you can listen me perfectly, let me know that. If you can't listen me, then let me know that as well. Okay, let me actually make it daily. Okay, perfect. Happy birthday, happy birthday, happy birthday. Thank you, brother. Thank you so much, guys. Thank you so much. Very good. Thank you, Halli. Happy birthday. Thank you, Veli. Okay. Is there any buffering? I can see that in my phone there is little buffering. Are you seeing the same buffering? If no, then let me know that. Okay. Happy birthday. Thank you. Thank you so much. Thanks to all. Okay. Happy birthday, bro. Thank you, Manu. So until yesterday, actually, we were waiting for the CPI because CPI is the best day for trading, in my opinion. After the number will go. After the number will release, then. So until 8:30, no trading. After 8:30, we will try to catch the run. At the same time, obviously, this is the learning session. So if any of you think that okay, we are going to copy his trade, please don't do that. I really appreciate your learning, except copying my trade. Okay, so that's the precaution. I'd love to explain. Declare that. Don't forget to give me the thumbs up. Don't forget to subscribe to my channel if any of you are new. Happy birthday. Thank you so much, guys. Thank you so much. Okay. It's my birthday, so let's see if we can do something good over here. I hope that we'll get a perfect price action at the same time. So around 8:30, the news will release. I would love to start with the dollar index today. If you look over here to the dollar index and look closer, this is the last parallel gap from from daily chart. Okay, below this last parallel gap, I have a swing low. It's not relatively equal lows, it's just a low over here. Though I don't want to mark this type of low as my relatively equal lows, as I don't have anything else, so I just marked it as a sell side liquidity. Okay, but to be honest, I really don't care about this low. All I was seeing that this low here and that low, they are relatively equal lows, which has taken over here. This daily last parallel gap is holding the price. This daily last parallel gap is holding the price. There is nobody which has closed below this daily last parallel gap. It closed below this constant crossment, but in my opinion, this is the fake breakout because market one more time tried to fall, went through this, daily parallel gap, failed. Came here, rejection. Look at the rejection. How beautifully it has been rejected from this last parallel gap from daily chart. At the same time, this is the lowest down close body close candle, order block, market went higher, propulsion block, trade that propulsion block, it should go higher. How far? At least until this order block. So let me mark this order block over here from daily chart. So until this order block, market should reach. If it is overzealous, it can go higher. Don't focus over here, this not from this time frame. So actually not over there. At least until this order block, which is actually the unfinished business. So market has traded this area, order block has traded over here, propulsion block didn't trade. Now if you say, brother, propulsion block is not that much important, I agree with you, but when I'm expecting market to go higher, I should go for something that is more obvious. As I don't have any relatively equal highs, I have last parallel gap over here, but it is too near to this price action. So in my opinion, in CPI, if market go higher, it is going toward that order block at least. Then if it is overzealous, it can perfectly trade this daily bearish parallel gap until the high, and finally it will go higher or lower. We will see that. Right now, my intention is market will go higher. That is my intention. I'm not going to predict the price where CPI is going to throw the market. I'm not interested for that. I'm interested after the CPI run. So from 8:31, I will start to look for my entry from 8:31 to 8:59. morning session, I mean New York local time. That is the area where I will look for entry. If I get an entry, perfect. If I don't get any kind of entry, perfect. If any of you are trading 50k combine, okay, so for example you are trading your 50k combine or 50k funded account, whatever it is, don't try to predict the price, don't try to take the entry after the CPI, because the volatility will be too much. Okay, most of the time the volatility is huge. If you'd love to put a stop loss, maybe you want to put a stop loss very small stop loss. It will be near about 50 to 60 handle. Very small stop loss is going to be 50 to 60 handle. If you are using more than 100k, that means 100k is also risky. If you are using 150k at least, then and only then try to catch the run after 8:30. It's my request, because otherwise you will get just one chance. If you are wrong, you will just, your daily limit or whatever it is, it will be gone. So make sure that if you are using your 50k account or 50k combined or funded, whatever it is, don't try to trade after 8:30, after CPI, after PPI, after FOMC. Don't try to trade through that 50k account. It's a request, and rest is your decision. I'm not interested to give you more suggestion about that. So from dollar index, I'm expecting that market will go higher. From the daily chart, it seems like that market should go higher. If it keep falling, that is different matter. I'll be I mean helpless around this type of situation, because the price action is telling me it should go higher. It is telling me from the daily chart. Let's go to hourly chart. What can we see from the hourly chart? So from hourly chart, as you can see, this high and that high, they are relatively equal highs. What a beautiful clean resistance level. All of this area is backed and jacked. Okay, so it's just, I mean, it went higher, well, lower, higher, lower, higher, lower. Lot of run over there. It's absolutely balanced. This area is balanced. Market doesn't need to fall again. If it wants to fall again, then it will fall for this sell side liquidity. In this type of situation, I will be absolutely wrong toward my direction. I'll be wrong. Okay, so over here, all I can see that I have clean buy side liquidity there, clean buy side liquidity over here. I have some buy side liquidity around that area, lot of buy side liquidity, except this extreme sell side liquidity and little sell side liquidity over here, though I don't think so this is the sell side liquidity, because this low has taken that low, then this low even failed to go until the week over there. So it has traded some kind of order block or last parallel cap or anything. It has traded over there, then went higher. Especially it has traded this daily last parallel cap, bullish last parallel cap, then rejected very dramatically. It has been rejected. Went too far, made relatively equal highs. There is also relatively equal highs, fall again until this propulsion block. If you look over here, this is the last parallel cap from hourly chart around that area. This is the last parallel cap. Trade that last parallel cap. It should go through this. First, it will go through this parallel cap. It will use this parallel cap as a support. Then it will keep going higher. This is my expectation from dollar index. Now, when I'm expecting dollar will go higher, obviously all other market will fall. That is my expectation. So keep that in your mind. If dollar is going higher, all other markets should keep falling. So I will analyze my market depending on this dollar index, because this is my barometer. I would love to see whatever the direction is from here, the other markets will go to the opposite direction. Let's go to Dow, and from the daily chart. Okay, so this is the daily chart and this is the Dow. You can see this is a clean lows over here for Dow. Okay, Dow, E-mini Nasdaq and E-mini S&P, all of them are the correlated market. So if Dow is falling, other market will keep falling. Dow is the most strongest one comparing with other two. That means it actually the volatility or the run. Okay, if Dow run until this area, let me actually mark the drawing. If E-mini S&P come here, at the same time Nasdaq come here, you will see Dow is here. Dow is here. Okay, so they are correlated market and they actually all move all together. Okay, you can see over here I have relatively equal lows around that area, and I have relatively equal lows over here because of the the contract change. It's showing like that way, but if you go to your YM on, you will see that there is a very clean lows over there. So this is very clean lows, this is very clean lows. Over here I have that clean highs, but there is a problem. Though there is a clean highs, but this high has taken that high. I just marked it because this is the obvious liquidity. I just marked the high. Actually it has taken that high. Okay, so market has taken that high, which the liquidity has taken. It's the obvious liquidity. Now when market will done its lower job, then it will go for this obvious liquidity. I am not sure that market is done its job over there or not. And as you can see, market has both buy side liquidity and sell side liquidity for Dow. Which one is going to be taken? I have no idea, but I have an idea depending on dollar index, because from dollar index I know that dollar is going higher. When dollar is going higher, this should fall. This should fall for this sell side liquidity. It doesn't need to take that sell side liquidity, but it should fall for this sell side liquidity because dollar is going higher for the buy side liquidity. At the same time, if this guy is also going higher to take that buy side liquidity with dollar index, then that will be low resistance, sorry, high resistance liquidity run. That means market will go over there and take that buy side liquidity, but it will be so much seek and destroy mode. Seek and destroy mode. This way it will go higher and take that buy side liquidity. If dollar is falling, maybe my analysis is wrong and dollar is not going higher, it is actually falling. At the same time this guy is going higher. Okay, that's perfect. Low resistance liquidity run because it is going toward that obvious liquidity. Though I don't want to see that. I really would love to see it will fall. What else can happen? It can go higher, then it can fall. I'm not interested to see that much for volatility today because this is the daily chart. So from the daily chart it can't just take the high, then it can't go for the sell by one CPI news. So as this is the daily chart, every candle is the daily candle. I don't want to see by 1 minute or 5 minute or 15 minute it will take that high, then it will falling. So either way it will go either toward that sell side liquidity, toward that buy side liquidity. We will see that after the news. Until news, the Dow is not telling me where it is actually reaching. Seems so beautiful sell side liquidity, so beautiful buy side liquidity. I don't know where it is going. You can say that rather it is in premium. So if you just mark this low and that high, you will see this in premium. No, I'm not seeing the premium. I'm seeing the market. It is very near to that buy side liquidity. It seems like that it will go for that buy side liquidity because dollar is going higher. I'm not thinking that market is going higher to take that buy side liquidity. I'm not thinking that market is going to fall because it is in premium. Okay, so premium and discount is something I will talk later, maybe someday, but it's not that much. Okay, what to say? I don't know. So from here, this is the hourly chart for Dow. Why is Dow? Because CPI, I would love to make sure that you should understand what is going to happen by that news and how can you predict the price. And for predicting the price, sometimes before the big news, you have to analyze all of those three charts. Four charts: dollar index, Dow, mini S&P, and Nasdaq. So you will get an overall idea. This is the hourly chart. From hourly chart, you can see I have very clean buy side liquidity over here. This is that daily buy side liquidity. Okay, over here, this is that daily buy side liquidity. This is hourly buy side liquidity. If you look over here, I don't have any sell side liquidity. No sell side liquidity. Now you can say, brother, I have some sell side liquidity around that area, maybe around that area, but and here somewhere I don't see any clean sell side liquidity except that buy side liquidity. So from daily chart, it seems like that market is going higher because I'm expecting dollar will go higher. I can't just think that Dow is go higher as well. So I have to think that Dow is going to fall. But how can it fall? It first can go higher, take that small buy side liquidity, then it can start to fall. It is possible. It doesn't need to take that buy side liquidity, but it can take this buy side liquidity, which is very near to this area. Okay. At the same time, if you look over here, this candle, okay, and let me actually show you this week 50% has been broken over there by that two candle. Now is it fake breakout? This is going to confirm that is that fake breakout or not. In my opinion, when it was going higher and if it could close above the constant crossment of that specific week, I would say this is broken. This constant crossment is broken, but so far it seems like that it is the fake breakout. One candle close above this constant crossment, very next candle come back again, and it is a very nice run, big run. So in my opinion, this constant crossment is not broken, it is holding the price. when it is holding the price and trade the last fair value gap. Where is your last fair value gap? The 50% of that week last fair value gap. This is a valid order block. Trade that order block one time, two time, fall dramatically, then come back again. Where did it come back? Last fair value gap to that hourly chart. After trading that last fair value gap, market is falling and consolidating right now. It is preparing for the CPI. I would love to say it will fall, but obviously before falling, it can simply go higher and take that buy side liquidity. Again, as dollar index, I'm expecting will go higher. I'm expecting this guy will fall. Let's go to E-mini S&P. So there is E-mini S&P, and you can see this clean buy side liquidity from E-mini S&P. I have sell side liquidity around that area. I didn't mark it. This low and that low, they are relatively equal lows. I just didn't mark it because it's too far. Price came here to this last fair value gap from the daily chart. This is the last fair value gap. You remember from Nasdaq, the last fair value gap has broken, but this guy even failed to close below this last fair value gap. I mean, what should I think now? The last fair value gap is holding the price, so it should go for that buy side liquidity. Over here, I have that clean buy side liquidity from daily chart. From Dow, you have seen that market is very near to that buy side liquidity, very near to that buy side liquidity. Forget about premium and discount. Please, it's my request. Forget about premium and discount. Just think about the price action. It is very near to that buy side liquidity. This last fair value gap is holding the price. What should I think? Market is going for that buy side liquidity. But I'm also expecting dollar index is going higher. So what should it do? It should fall. How can I know that? Where it is reaching for? If around the 8:30 am, if I see that dollar is not going higher, it is falling and it started to go higher. The first run started to go higher and didn't take that buy side liquidity. What should your expectation? Market is going to take that buy side liquidity. But dollar index is also going higher. This guy is also going higher. Stop trading. Don't push your button until opening of 9:30 because it's gonna be high resistance liquidity run, seek and destroy mode. Make sure that you understand this part. Isn't it so beautiful that market is going higher to take that buy side liquidity? This last fair value gap is holding the price. It should go for that buy side liquidity. Okay, let's go to hourly chart. So this is the hourly chart, and from the hourly chart, you can see that I have this sell side liquidity over here, this low and that low. Not sell side liquidity, but I just marked it. If market is falling, I will look for this low and that low as my sell side liquidity. Okay, but to be honest, this is not sell side liquidity. I have the sell side liquidity below here somewhere, but I just marked it. Primarily, this is my sell side liquidity. I have the buy side liquidity here, not the extreme one. This is the extreme buy side liquidity from the daily chart. This is the small buy side liquidity. Is it reaching for that buy side liquidity? Is it reaching for that sell side liquidity? We have to wait for CPI. When after CPI, dollar index and E-mini S&P will tell us what is going to happen. For selling, obviously market has to break this last fair value gap. This is the E-mini S&P. Don't get confused because we are not yet in Nasdaq. So when we'll be in Nasdaq, that will be much more clearer. From E-mini S&P, when market is going higher, this is the best. Okay, it is the speed. When market is going higher, the speed is E-mini S&P is the boss comparing with Nasdaq. When market is falling, Nasdaq is the boss comparing with E-mini S&P. Just remember this last fair value gap from daily chart. All you can see that from daily chart, the last fair value gap, E-mini S&P failed to break. That means it is too weak. When it is falling, it is too weak. It doesn't want to fall. But Nasdaq is too strong. It is falling. It is breaking everything. Okay. But when market is going higher, this guy is the strongest one. So if market started to go higher and it is actually going higher, what is the best opportunity to take entry? From which market? Obviously from E-mini S&P market. When market is falling, if you think that market is going to fall for this sell side liquidity, you should switch to your chart to Nasdaq and you should look for a sell from Nasdaq. Now brother, why you are talking to different chart? It's all about the SMT. So if you want to trade through SMT, sometimes you guys ask me, brother, there is SMT, and this time from like the 3 to 4 days, last 3 to 4 days, you guys actually talking about SMT too much. So that's why I added this thing. If you would love to trade through SMT, then remember you have to switch the chart. You can't just trade in one chart. If you think that market is going higher, you have to take your entry from E-mini S&P. If your SMT or everything is telling that market is going to fall, then you have to go to Nasdaq chart and you have to take the sell from Nasdaq. You can't take sell in mini S&P market, you can't take buy in Nasdaq market. If you would love to trade through SMT, okay, that is just an indicator, something like that, okay, some kind of indicator that is going to tell you that your analysis is right, and in that type of situation you have to do that. Make sure that you understand this part. I'm not going to read your comment. Let's go to our Nasdaq. So here, this is the Nasdaq. This is that last fair value gap. You have seen that in mini S&P market failed to break that last fair value gap. But when market was falling, it didn't even give a shit to this last fair value gap. It just went through this one. Come back again. I told that if market would love to fall, it should not close above the constant encroachment of that last fair value gap. That is the last fair value gap, constant encroachment. It should not close above this constant encroachment. Now from daily chart, all you can see that I have very clean buy side liquidity here, but it's too far from here to here. It's too far, and this is that all-time high, which is also much more higher. This is the sell side liquidity, which is very near to this market. Comparing with this one and this one, it is 50-50. Though to be honest, I mean, just let me show you. This is the area. Okay, look, almost this is the 50%. Market is at the 50%. Where it will go? Is it going for that one or is it going for this one? If you ask me that, brother, can you look for buy? Yeah, obviously I can look for buy, but if I look for a buy, then there is a lot of resistance. First, constant encroachment, high, bearish fair value gap, order block, sorry, propulsion block, order block, mean threshold, then buy side liquidity. If I look for sell, I have the sell side liquidity. Nothing over there. At the same time, if dollar index is going higher, it is going to be low resistance liquidity for the sell side liquidity. Dow and mini S&P is telling me that they are going for the buy side liquidity. Nasdaq so far is telling me I'm going for this sell side liquidity. If Dow and mini S&P is going for buy side liquidity and it started to fall, don't touch this market. Why? Because tomorrow we have PPI as well. If the market is not good today, it will be best tomorrow because we have PPI tomorrow. Keep that in your mind. We have PPI tomorrow. If it is not a monster move, tomorrow is gonna be the best way to trade. Either way, I told that you have to wait until CPI, and now I'm telling that tomorrow will be the best. But this is the situation. Not always, but sometimes this type of situation happens where you should have been very careful about the price action. So this is the day where you should involve your real money. If it is a 50k combined, don't push your button until 9:30, because until 9:30, I mean until 9, that's gonna be huge volatility. And in that type of volatile area, if you're trying to trade through your 50k account, trust me, your stop loss is not going to cover your daily loss limit. Okay, so make sure that you are not involving your real money if it is 50k account. Yeah, obviously after 9:30 you will get more chances if the market is not some kind of consolidation or something like that. Okay, so yeah guys, I have to go to hourly chart, and from hourly chart around that area, all you can see, I don't have any buy side liquidity. But if you look over here, this low, that low, obvious liquidity over there, and I have some last fair value gap, anti fair value gap, and finally this sell side liquidity. I have all of this thing area over there. Right now price is trading this constant encroachment of that daily last fair value gap. I didn't want to see that market will close above the constant encroachment. From daily chart, it didn't close yet, so I hope that market will fall. If it started to fall, look at this sell side liquidity around that area. I have marked it from 15-minute chart, so I'll show it to you from my 15-minute chart. Okay, so I don't want to stay over here in hourly chart. Let's come to 15-minute chart. So this is the 15-minute chart. This is the 15-minute last fair value gap. Here, this is the 15-minute last fair value gap. This is the very clean sell side liquidity. I have clean sell side liquidity around that area. This is the also clean sell side liquidity around that area. I have a lot of sell side liquidity. I don't have any buy side liquidity except this one. Except this one. So I really don't want to see that market will go for that buy side liquidity. Instead, it will fall for this sell side liquidity. Okay. 5 minutes left, and I will be back within 5 minutes because I have to pray. It's Maghrib over here. I'm so sorry, but I have to pray. I am extremely sorry. So if you get angry on me, I'm extremely sorry. So I'll be back just before CPI. I just need to pray. Okay. If you have any question, you can ask me that question. I'll be back and then I'll try to reply you. I'm back. I am back. Guys, don't forget to give me the thumbs up. Don't forget to subscribe to my channel if any of you are new. So 1 minute left before the monster move. Don't try to predict the monster, okay? He's gonna destroy everyone. He's the monster. Don't try to predict him. It's bad if 930 run is lower run, then 829 run is lower, then most of the time 830 run is higher. So opposite run, okay? So next run can go higher. So I don't want to see that. I love that. I love that. Okay, perfect, perfect, perfect. Now dollar index is going higher and this guy is going lower. I love to see that. This is the mini S&P is also going lower. Love to see that. This is the sell side liquidity. But there is a problem. What is that problem? When the first fair value gap will appear over there after 8:30, most of the time market has an intention to reach until the 50% of that fair value gap. So when this candle will close, I'll mark the 50% of that fair value gap. Okay, that fair value gap is the most important fair value gap for me, where market 90% of the time market is going to trade until the 50% of that 1 minute fair value gap 50%. Remember, not 50-minute fair value gap, 1 minute fair value gap 50%. I'll just adjust it. Okay, when it will close, I'll just adjust it. Can't you hear me? Oh, okay. It has an intention to reach until the 50%. Okay, first 50%, then fall. Remember, 90% of the time it has intention to reach until the 50% of that first fair value gap created around 8:30. We can do, yes, we can. Oh, okay, thank you. Let's see if it can reach until the 50% of that fair value gap first, then it is going to fall or not. Remember, this is not 100% of the time. 95% of the time after CPI, the first fair value gap around the 1 minute chart, market has an intention to trade until this 50%. Remember that, okay? If it can make a fair value gap over here, before tapping over here, tap to this fair value gap, I will take buy until this 50%. But for that, it has to make a fair value gap over here. Stop loss is going to be too small. Obviously, it has. Okay. No fair value gap, no entry. Remember, no fair value gap, no entry. It will go higher and trade until this area. I'm not interested to touch that market to take look for buy. What is my intention? What is my bias? Obviously sell. I will go for sell. But first I wanted to catch that move. If it could make a fair value gap over here, then I could go for that buy from here to here until that area. I'm not interested to look for sell until market reach to this 50% of this fair value gap. I'm not interested to look for sell. So if I get any kind of opportunity to look for buy, any kind of opportunity before tapping this 50%, I'll go for that buy. Any fair value gap, any obvious order block, anything, I'll just push my button over there. Is that gambling? Absolutely not. That is my experience, brother. But I'm not going to gamble here without any confirmation or price action. I'm going to push my button. No, I'm not going to do that. Though I know it is reaching for that 50%, I'm not going to push my button if I don't get anything over here. Without me, it will reach over there. I'll let him go. This is called trading. You have to depend on the price action. Because that is going to happen 95% of the time. It can be today, can be the rest 5% of the time. That means today market doesn't want to reach until that area. It can happen. So I'm not going to believe it. I will wait for the price action first. Make sure if you are trading your 50k account, you are not rushing. Okay. By the guys, how is the audio, brother? Is it okay or already collapse again? If you understand this small, if you know this small information that after CPI, the 1 minute fair value gap 50% is important, you will be able. It is very easy for you to 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 understand what is going to happen. It is very easy to understand that. Right now, if you ask me what you are looking for, brother, obviously I'm looking for buy. How far? Until this constant crossment. If I didn't knew that after the CPI, most of the time market actually reach until this 50%, then what should I look for? Obviously sell until this sells at liquidity, and I would be maybe okay, again maybe I would be get chopped up because I would see this is the fair value gap. I would love to take my sell from there, and then it will stop me out. I would be chopped up. Okay. I'm going to force the market to give me the entry. So this is my order block. Okay, not yet. If it can close one tick above this candle, yeah, I'm going to take the buy from that order block. Why is that order block? I'll just talk about that. This my order entry. My stop loss is going to be below this order block. Target is going to be this 50%, little below of this 50%. Why is that order block? It has traded the lowest, low of that daily bullish fair value gap. This is the bullish fair value gap. This candle has traded the low of this bullish fair value gap. I took my entry over there, and I would love to see if there is any opportunity to take partial or not. Actually, it is 30 handle. I should take a partial over here, but I'll let it go. I'll just let it go, okay? But I should take a partial over here. I'll just let it go. Either it will hit my stop loss or it will hit my target, okay? I'm just not going to take the partial to that high. I'll just let him go until the area I am expecting to reach over there. My stop loss is 16 handle. It's cool, okay? And target is 30 handle. So if it hit my target, I'm happy. If it doesn't hit it, okay, I'll put my stop loss to the break even because I didn't take the partial. As I didn't take my partial, so I put my stop loss to the break even. If I would take my partial, then I could hold it until the order block low. As I didn't take the partial, I put my stop loss to the break even. But if any of you would love to take entry over here, please make sure that you have taken the partial. You have to take the partial over there. Remember that. Little bit, little bit, little bit, little bit, little bit. Oh, okay. My target is at the safe area because I didn't target the 50%. So it should reach until the 50% and my target is little below that 50%. So I should be safe. That means it should hit my stop target. There you go. There you go. There you go. There you go. Done. I'm going to close my stream for today, okay? See you, brother. I told you not to trade until CPI because CPI is the best day to trade. You didn't believe me. You wanna blow your account to before the CPI where market most of the time is going to make the liquidity. It's your job, man. I have no problem with that. So my job is done, okay? Those guys will come later and start to count my losing and losing trade and winning trade. Tell them that I'm done for today, okay? So everything I will do after this, it's gonna be the study only. Just study. Just study. What I'm looking for now? Sell. What I'm looking for now? Sell. Why? Market reach until the area where I wanted to see. 95% of the time after CPI, the first fair value gap from 1 minute chart 50%, market take that 50%. I would love to look for this candle as my order block. I'm not going to push my button, but look this candle. This is your order block. Okay, this candle is your order block. Remember, I'm not going to push my button anymore. Here, this is your order block. You have to know what you are doing. If you don't know what you are doing, oh man, then I will say, let's see, let's see, let's see. Okay, I understand, I understand. Okay, this is now your order block here. This is your order block, but I'm unable to push my button over there. Here, the reason is if I push my button, my stop loss has to be above this order block here, 33 handle. I'm just not interested to take that 30 handle stop loss. So I'm not interested to push my button. Where market is reaching for now? You know, you know. As it has traded the opening, I'm going to mark that open. I'm also going to mark the 50% of that order block because market should not close above this 50% of that order block. Ding 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 ding. Where it is reaching for again? Sell side liquidity. Where should you take the partial? Ding 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 ding. One tick, just one tick above here. Is that a best entry setup? Absolutely not, because I'm using the order block theory. That should be the partial. Remember, it should be the partial. No option. I want to see this fair value gap will be unfilled. Unfilled. So my stop loss is safe just above that unfilled fair value gap. Just above that one. Why didn't you take the entry? Because the stop loss is gonna be too much. Too big. Too big. I'm not interested to take that big stop loss. Actually, let me check how much is it is going to be from there. Still 22 handle. Still 22 handle. Not interested. From there. It's a good thing. Yeah, it's a good thing. Let's see if it can give me another opportunity or not. Little more, little more, little more, little more, little more. Now everything is going to be just study purpose. Remember, I'm not waiting for the perfect setup now, and this is going to fall or not. How do I know that? When this low is broken, then it is more confirmed that market is going to fall. Until this one is not broken, that is not confirmed, but yeah, it is going to be broken. Okay. Wait, we don't tap to this order block one more time, and I'll be okay. Just let him fall without me. This should be unfilled. Where should be my stop loss? Above this candle. See this candle? Above that candle, that should be my stop loss. I'm using this unfilled fair value gap to believe that market is not going to fill that unfilled fair value gap. It is going to fall at least until this area. Until this area. Okay. So I'm using this one just to put my stop loss. If it is broken, I'll be broken as well. I don't want to say it is going to be filled 100%. Yeah, it can reach until this mean threshold. Perfect. Nothing is wrong over there. It should not fill this parabolic up 100%. If it filled it 100%, then I'm wrong and I'll start to cry. No, not 100%. 50%, little open, it's okay. Little open, it's also okay. But if it is closed 100%, I'm wrong. Okay, it has closed this parabolic up. Now my stop loss is in danger. This is the last area. This mean threshold is my last line which can stop the price. That means if body is closed above this mean threshold, my stop loss is going to be taken because I put my stop loss at this below this candle. So at least above this candle it should be stop. I mean safe, because my okay, still it is 22 handle. Still it is 20. I thought that it's 20 handle, but more than 20 handle is always risky. Let's wait. It is going to fall, but it can be taken me. It can taken me. Okay, I got a stopped out. What I have done, I didn't wait for this low is broken. Until that, I should have waited. I didn't do that. I pushed my button. It has punished me. I will just look at this candle high. Is it going to take that one or not? If it is not taken, then I'll take a re-entry. If this high is not taken, I'll take re-entry. When it will go below this order block, I will take re-entry from this order block. If it keep going higher, I'm just not interested to push my button over there. For buying, I have to wait until price is going above this parabolic gap. This parabolic gap will be broken 100%. Okay, as it has taken that high, I'm just not interested to use this order block anymore. Order block has done. If it keep going higher, I will look for this parabolic gap is broken or not. If it is broken, then and only then I have to start to look for the setup for buying. Until then, no buying is valid. And obviously the entry will be valid until 9. After 9, no entry is valid. No, I'm not looking for buy right now. I'm still looking for sell, but yeah, this time I will wait until this low is broken. If it keep going higher, I will wait for this parallel gap is broken first, then and only then I'll think about the buy. Until then, I'm not interested to look for buy. Whatever it has to do, it has already done that things. It doesn't need to go higher again. It should keep falling. If and only if it is willing to go higher, then it has to go break this parallel gap. It has to go above this high. Then and only then it will be able to look for buy. This is the last parallel gap. Is it reaching for this last parallel gap? I need to see that. For that, I have to wait for this one is broken. I'm watching this 15-minute chart as the same time. All I'm seeing that market came until this last parallel gap from 15-minute chart. After trading this last parallel gap, it is going higher. How far it can reach? I have to wait for that. I'm not interested to look for buy again. Let's see if it can hold it or it is going higher. Waiting, 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 waiting. Let's wait little more for the best option to go for buy or sell. No need to rush because we have still lot of time. I don't think so. It's we have to rush right now. We can wait for a little longer. What is your expectation? Market is going to fall. That's my expectation. I have 6 more minutes to take another entry. If I can't find another entry within 6 minutes, I'm not going to take any entries until 9:30. It can take CPI high. It can take the CPI candle high, which is low probability for me. I am interested to look for sell actually. Give him some time to trade the entry favorable gap. Okay, dollar index has already taken the buy side liquidity. If dollar index has taken the buy side liquidity, then can it go for that? So, perfect. Okay, it is going for buy side liquidity now. Maybe until this last favorable gap. I am not interested to look for buy right now. Wait for little price action. Can it reach until this last favorable gap? Then it can show me any kind of weakness to fall. So I will wait until 9:30 to look for another setup. Ketan Patel, welcome brother. I will wait until this last favorable gap from 15-minute chart to see if it can reverse from that last favorable gap from 15-minute chart or not. So let's see. Let's wait until okay. It didn't trade over the last favorable gap. Let's wait until this last favorable gap from 15-minute chart. Can it reach until this area? Then it can fall or not. And I will wait until 9:30. Then I will go for another opportunity to look for sell or buy. I did a mistake over here. I should have waited to break this low of this bullish fabric from daily chart. I didn't do that. This is another buying opportunity from this. Someone asked me about the institutional order flow entry drill. This is that institutional order flow entry drill. It will tap to this fabric gap it will go higher until this low. Here, tap there, come here to the low. Stop loss is going to be just below this fair value gap, 15 handle. If this candle can come here, I'll take that buy. If this candle can come here, I'll take that buy. If the next candle come here, I'm not interested to take that buy, because the next candle will be 9. So I'm able to push my button until 8:59. Why I'm looking for buy now? Because this fair value gap is broken. When this fair value gap is broken, then this is the last area where market should go. So this is the candle. If it can reach here, I'll go for that buy. If the next candle come here, I'm not interested to take the buy. The reason is the next candle will be the 9 candle. No entry is valid for me from 9 to 9:30. So within 6 seconds, if it come over here, I'll take that buy. I'm not interested to take buy anymore. Buying is only valid if this fair value gap is broken. This is the first fair value gap after the CPI run. So when this fair value gap is broken, this is the institutional order flow entry deal opportunity, but I am not going to push my button, even not the close approximately entry. The reason is it's already 9. So if this candle could tap over there, I would be in the market for that 27 handle. Now I'm just not interested to push my button, not even the close approximately entry. Now I would love to start to look for sell again from this fair value gap, from 15-minute chart, this fair value gap. Can it hold the price, send it lower again? If this fair value gap is broken, I'm no more bearish until this buy side liquidity. If this fair value gap is broken from 15-minute chart, this is the last fair value gap from 15-minute chart. If it is broken from 15-minute chart, I'm done for selling. I will start to look for buy, only buy. So this is my last area which can hold the price, send it lower again for the sell side liquidity. Last area for looking for the sell. No entry is valid until 9:30. So even if there is an opportunity to take sell, I'm not interested to look for that sell. I will only go for sell if and only if the setup has created after 9:30. So from now to until 9:30, I have nothing to do. I'll just keep waiting to see what it is going to do. Remember, I am watching this 15-minute candle with this 15-minute last fair value gap. Can it break this last fair value gap from 15-minute chart? Then and only then I'll start to look for buy again until this buy side liquidity. If it failed to close above this 50-minute last fair value gap, I'm not interested. Look for buy. I'll be interested only look for sell. Look at this dollar index. It reached until this fair value gap over here. Reach until this fair value gap perfectly. Yeah, it can go little lower one more time. Tap. See this 15-minute fair value gap over there. It can reach for that 15-minute fair value gap to tap over there. Then it will go higher again. It is my expectation. Why market was going higher? Because this guy was falling after taking the buy side liquidity. After this buy side liquidity, this is the next buy side liquidity for dollar index. So it will go for this buy side liquidity. It just fall to trade this fair value gap. At the same time, Nasdaq has reached it's in its last area. This is the last area, the 50-minute last fair value gap. So it should hold the price, send it lower again. When it will keep falling, this guy will keep going higher for this buy side liquidity. This dollar index, it will go for that buy side liquidity. If dollar index is willing to fall again, at the same time Nasdaq is going to break this last fair value gap, which I really don't want to see, and then dollar will keep falling and this guy will keep going higher. So 30 minutes will tell us what is going to happen. 9 to 9:30. I had just another opportunity to take buy from this institutional order flow entry drill until the low of this last parabolic gap, but market didn't give me the opportunity. So I missed that buy from there to there. That doesn't mean I'm going to give up. No. This last parabolic gap, it reached over there, perfect. I want to look for sell from this last parabolic gap. If the sell setup has appeared over here after 9:30, I'll go for that sell with confidence until this sell side liquidity. If it keep going higher, I'll look for this 15-minute parabolic gap. Is it broken from 15-minute chart or not? If it is broken from 15-minute chart, yeah, then I will start to look for buy until this buy side liquidity, which I really don't want to see. I would love to see that market will fall from this parabolic gap. That's all. Yep. Wait until 9:30. Okay, please don't look for setup right now. Wait until 9:30. After 9:30 it will be a better opportunity to look for buy or sell. Today so far it's not consolidating, so I believe that today's price action will be the best price action. So wait until 9:30 for the best opportunity. Believe this price action that this last parabolic gap from 15-minute chart. Let me show you one more time. This last parabolic gap from 15-minute chart is holding the price. Okay, this is the last. Look at this whole price action, how slowly it reached until this last parabolic gap. After reaching this last parabolic gap, it should hold the price, send it lower again again for this sell side liquidity, then that sell side liquidity. This two sell side liquidity should be taken. Is there any other sell side liquidity or not? And this is the extreme one. I really don't think that market is going to take that sell side liquidity by today, but this sell side liquidity and that sell side liquidity is so obvious for me, so I will look for that one. But if and only if this parabolic gap is broken, then until this parabolic gap or this buy side liquidity, here is some buy side liquidity, these two, let me actually mark that one as well, so later I would get confused. Here this buy side liquidity will be triggered if this last parabolic gap is broken from 50-minute chart. If it is broken, then first this sell side buy side liquidity, then that buy side liquidity, both of them will be taken. But right now this is the last parabolic gap which is holding the price. So far the reaction from this last parabolic gap to until that last parabolic gap, perfect, everything's cool. Now it should fall from this 50-minute last parabolic gap. It should fall for this sell side liquidity, that sell side liquidity, and finally so the sell side liquidity around that area, until that area. By the way, I didn't check actually today we have any new day opening gap or not. Do we have any new day opening gap? Remember, don't focus on the sell or buy right now. Until 9:30, just wait. Okay, we have a new day opening gap. 35, 37 to handle. Okay, don't look for buy or sell right now. Keep your narrative inside your mind, then look for the setup after a little, after 9:30. So until 9:30, keep waiting. It can be taken, Ayan, but everything is going to be depend on this last parabolic gap. I don't think the market like that way. It is going to take the NFP high or that or that or that. I would love to look for this price action. Okay, so over here I'm watching this last parabolic gap from 15-minute chart. Can it hold the price, send it lower again because I have the sell side liquidity here, or it is going to be violated and market is going for at least this buy side liquidity and then that buy side liquidity. I don't know anything else, just nothing except these two things, nothing else. 15-minute last parabolic gap previously, how can I miss that? It actually failed to trade until that area. So if it could reverse and take that sell side liquidity, it would be the random reversal. From there there, it would be the random reversal, because look over here, there is nothing. Market came until that area, there was nothing. So I really don't know how I missed that part. Sometimes I miss the part. So that would be the random reversal, because it was reversing from the random area. Now it came until the certain area, it can reverse from this 50-minute last fair value gap. It is logical. So let's wait for 9:30 and see if it can break lower or not. Right now, don't look for any kind of entry. You can frame everything. For example, you are watching this fair value gap over there. Mark that fair value gap. Can it hold it and send it lower? Just observe the price. Don't push your button. Observe the price. No rush, nothing. If it keep falling, you will get at least 1000 opportunity to take sell. If it keep going higher, you will get at least 1000 entry opportunity until that buy sell liquidity. Trust me, man, I will show you that right now. Don't look for any buy or sell. Just observe the price, what it is going to do. Okay, do you get my point? We'll go for the price action. Okay, that was inside the 1-day daily fair value gap, but it is not a certain level. It's not a certain level, if I'm not wrong. Yeah, it's not a certain level. It was random, not even the upper quadrant. So it was a random level. Now it has reached to the last fair value gap. It's a level, like some kind of fair value gap you have to have from 15-minute chart for the reversal. For example, you can see that market fall until the last fair value gap. See, until this last fair value gap it reach to go over there. It is not reversing from a random level. Either it has to trade the last fair value gap or the entry fair value gap. For reversing, okay, reaction can happen from the random area, it's okay, but reversal has to have from certain level, and that should be the fair value gap. That should be the either last fair value gap or the the entry fair value gap or something like that. This guys came here, fake breakout, one candle just close, just little go above this fair value gap. The very next candle come again inside this fair value gap. What is that? Entry fair value gap. Last fair value gap, entry fair value gap. Tap to this entry fair value gap, boom. Then come back again. Where did it exactly come? Order block. Don't want to mark the order block, no worries. Last fair value gap. Tap to this last fair value gap, boom. So make sure that you understand that part. Random reversal I don't like. Sometimes shit happens, but most of the time market is not going to reverse from the random area. Wait until 9:30 to look for another entry opportunity. Don't rush. From 9 to 9:30, most of the time, the best setup doesn't work. The best setup doesn't work. There is a volume imbalance above the 15-minute fair value gap. If it can break this 15-minute fair value gap, it is going to take at least this buy side liquidity. If it can break this fair value gap from 15-minute chart, at least it is going to take this buy side liquidity. So 19040.25 is going to be taken if this fair value gap is broken. Trust me, I am thinking about this parallel gap which is going to hold the price, send it lower again, because I have the sell side liquidity. The buy side liquidity I don't care actually. So I am expecting that this last parallel gap is going to hold the price, sending it for the sell side liquidity. But that is my expectation. Let's wait for the price action now. We have the expectation, now we have to look for the price action. At the same time, if you look the dollar index has traded this 50-minute bullish parallel gap over here. So market trade the propulsion block. You have already seen, I have shown you. Market went higher, take that primary buy side liquidity has taken. That was the primary buy side liquidity. After taking that primary buy side liquidity, now it is trading this bullish parallel gap from 15-minute chart. After trading this bullish parallel gap, it will go for that secondary buy side liquidity. When it will start to go for that secondary buy side liquidity, Nasdaq will start to fall again. So until this buy side liquidity, when it has taken, it is now trading the imbalance. Now, if it keep falling, if it can keep falling, yeah, in that type of situation, maybe Nasdaq will keep going higher. So I don't want to see that, to be honest. I really don't want to see that. Hey T2, doubt can be considered the 50-minute news candle as order block. 15-minute. What did you say? This one? Absolutely, man. Absolutely, you can use this one as a order block. I mean, just forget about the news. Did it match the rule or not? It has traded the fair value gap. This candle closed above this, the down close body close candle. Absolutely, it is valid for order block. That means it can easily come back again to trade that order block. Then it can keep going higher. It can happen. It is a valid order block from 50-minute chart. But remember that fair value gap is much more stronger than anything else. Breaker block, order block, anything else. Fair value gap is much more stronger. So when I have this last fair value gap, market is trading, I should have wait to see is it going to be broken or not. If it is not broken, I just can simply look for the buy. I should look for sell, as I have the sell side liquidity from long higher time frame and from other time frame as well. So I should look for sell side liquidity until this last fair value gap is not broken. When this last fair value gap will be broken, yeah, then if you want to go for buy, perfect, you please go for buy. Until it's not broken, you should not look for buy. There was a buying opportunity above this fair value gap to until this fair value gap low. So this area there was a buying opportunity. If candle could tap to this fair value gap around 9, I would go for that buy until this low. That was an opportunity from here to here, there to there. What I have done wrong over here later, actually, I was overconfident to go for sell, but actually it was respecting the low of this daily fair value gap low. It is the strongest fair value gap. The daily fair value gap is the strongest fair value gap. I didn't wait to be broken. So it is not broken. That was the fake breakout. One candle close, next candle come back again inside the range. That was the fake breakout. So I should have waited for another body close. Just one more body close. I didn't wait for that. I was overconfident. It punished me. I didn't wait for the another candle close below this daily fair value gap. If I take a loss, you will get a lot of information. So you have to take that notes. This daily fair value gap low is broken over there perfectly, but it is the fake breakout. That means one candle close, another candle come back again into the range. What should I look for? Another one candle close that is going to confirm that it is broken. This low is broken. So then if I take my entry or sell anything over there, it is going to work. But after this fake breakout, there is not even a single candle which has been closed below this daily fair value gap low. That means this is strong line. When I used this candle as my order block for buy run, because it was respecting the low, it is very strong, so I can leave this candle as my order block. At the same time, I avoid the what to say, I mean the priority, okay, the importance of this low when I took the sell because of my overconfidence. I avoid this thing, it punished me. I should have waited to see if it can close below this low. One more candle from 1 minute chart, can it broke or not? From even from 15-minute chart, market never break this low. There. No, it never break that low. That means I shouldn't believe this one fake breakout. I was overconfident. it punished me. It's broken one candle, two candle. When this two candle is broken above this parabolic gap, it is broken, this parabolic gap is broken. So where is the next line? This low of that last parabolic gap, the low of that last parabolic gap. Is there any buying opportunity? You have only this institutional order flow entry drill. Why? It is above this parabolic gap. See this parabolic gap, it is above that parabolic gap. So this is your only opportunity to take buy if it can come here, or you have to look for the close approximately entry. For me, if it is very near to that, I mean parabolic gap, maybe one tick or two tick, yeah, in that type of situation I push my button. But it was too far. Okay, so you can see from there to there it was too far, near about, let me check, near about two handle. No, I don't like it. If it is one or two tick above this parabolic gap, yeah, I'll go for that buy. Close approximately entry until this low, because this is the last parabolic gap from 15-minute chart. The direction is going to depend on this parabolic gap, which way market is going for. Okay, what about trend is your friend today? Absolutely, that is also cool. I mean, trend is obviously my friend. I have already in that in my mind, but for that I have to look for this is broken, because the trend is my friend is going to be confirmed after 9:30. So after 9:30, when the trend is confirmed, then and only then you can believe that trend is your friend. That's why I told you, if market keep going higher, you will get thousands opportunity. If market keep falling, you will get 1000 opportunity until this sell side liquidity, because today's trend is my friend. But the trend is going to be confirmed after 9:30. Until 9:30, nothing. No confirmation until 9:30. Okay, so if you ask me, no, we didn't even open our chart yet, because 9:30 is not there. Forget about the CPI. If you forget about the CPI, we even didn't open our chart. Our chart will be open around 9:30. After 9:30, if this is the uptrend, that means market is going higher, has broken this parabolic gap, yeah, perfect. You will start to look for only these things. No 15-minute, nothing, bullshit. Take the sell side liquidity, market structure sheet, parabolic gap, boom. Because today trend is my friend. But remember, that is going to happen after 9:30, not before 9:30. Okay, jerk. Reversal should happen always from 15-minute parabolic gap and could be from hourly. No, I love the use to use the 15-minute 15-minute chart only. Only the 15-minute chart. I don't like to use any other time frame. If it is 15-minute chart, perfect. Only not the 15-minute last parabolic gap. It can be the weekly parabolic. I mean, new week opening gap, new day opening gap. They can be happen as well. Look, it went above this parabolic gap. Maybe it will close above this parabolic gap. This candle will close above this parabolic gap. I don't care. I'm watching this 50-minute candle. Is the 50-minute candle closed above this 50-minute parabolic gap or not? That is the all. That is all I'm watching. Okay. Is it going to close above the 50-minute chart or not? Okay, it's time to give me some likes. And those guys wanna judge me. Trust me, I love to take one win. So I got one win. I'm done for that day. Whatever I will do here now, it's just for teaching purpose. Everything is going to be only for teaching purpose, nothing else. So make sure that if you wanna judge or count my winning and losing trade, you please count the first one and then leave the stream, because I am done. My trading is done. Teaching is will be continued. Am I going for the perfect setup? Absolutely not. But yeah, if there is any perfect setup, I will keep telling that this is the perfect setup. I'll keep telling that. Every other pushing button is just for winning. If it works, I will explain why. I always explain why I'm taking that buy. But if it doesn't work, I will explain more thing, like here, why I should not take that sell. What was missing over there? Fake breakout, didn't wait for another candle to close. That was my I mean, that was the missing part. Now, brother, I'm here in live, and lot of things in my mind. So sometimes I forget something. That's why I keep telling that don't copy my trade. But did I talk about this ever? Did I ever talk about this? That if you would love to see something is broken and if you see the fake breakout, then another you will wait for another candle to break. When it is broken, then and only then you will think that okay, this is broken. Until then, this is the fake breakout. Market is supporting this area. So it's not going to be broken, okay? This parallel gap is not broken yet. You will look for this 50-minute candle to see if it is broken or not. So from 1 minute chart, no, it's not broken yet. From 1 minute chart, it went until this area, trade that last, daily parallel gap high. At the same time, I believe there is any kind of parallel gap. Let me check. Actually, no parallel gap, but let's see anything else. Order block. Let me mark the order block until this area. Okay, so this is the order block. Just I'm not going to write down anything. I'm just marking it as a black line. Tap to this order block perfectly. See, tick by tick. Tap to this order block. Can it fall now? So that's why you should believe the 15-minute chart. Is the market broken from 15-minute chart? If it is broken from 15-minute chart, perfect. I am looking for sell again. I'm looking for sell until this parallel gap is not broken from 15-minute chart. I'm looking for sell. Trend is my friend, but the trend is going to be confirmed after 9:30. So until now, whatever I'm seeing, it's not my trend. After 9:30, the trend is going to be confirmed. Okay. So I hope that everything is clear to you guys. So if I look for buy, then I will look for buy when I will see a 50-minute candle has closed above this 50-minute last parallel gap. Then I will start to look for buy until this buy side liquidity. If you ask me what I'm looking for right now, I'm looking for sell only. Only sell. No buy for me. Nothing for me. No buy for me. I'm wrong? No, I'm not wrong. I'm telling you the fact over here. What I should think the price action. How should I read the price action? Why you are double bias? Why you are not looking for buy and one? Why you don't have the one bias? Why you are not looking for only buy or sell? I shown you at the beginning that I have the buy side liquidity and the sell side liquidity. Market is at the middle of the point. So is it going for that buy side liquidity? Is it going for that sell side liquidity? Nobody can tell that. I hope that today I'll be able to prove you that because yesterday was the messy price action and it should be the messy price action. If you look at the biggest famous person, they also told that they agree with me except ICT because ICT always take the entry. I don't know how, but he always take the entry. Most of the famous persons called that yesterday was the shitty price action. So yeah, obviously I will wait for that. There is no swing low which is valid for shifting market structure until now. SK trades. I want to see that this 50-minute candle is going to close below this concurrent crossment of that 15-minute last parabolic gap. So it is going, that is my expectation, that it is going to close below this concurrent crossment. If it closes below this concurrent crossment, that is the best case of scenario for me. Am I in hurry? Am I in rush to take sell? Absolutely not. Around 9:30, if you trade this parabolic up, are you going to take sell? Absolutely not. What you are going to do? I'm waiting. Oh, okay, Patrick is different. Okay, he's a psycho. I'm sorry to say like that way in my life, but he's just a psycho. So whatever he do, actually, you will get fun from his life. Obviously, you will get fun, but price action bullshit. Even don't know what he's doing. He just takes sell here, closed his trade over there. Take sell there, closed it here. Here, but take buy here, closed it there. Something like that. I really don't know what is that. I want to see this candle is going to close. Okay, there you go. This is the 9:30. I'm interested to mark the opening gap from there to there. This is the opening gap. Let's go to electronic chart. Okay, let me change the color here. Okay, this is the opening gap. It came until the 50%. Perfect, no worries. Again, I'm not looking for buy until this parallel gap is not broken. I'm only looking for sell. So I will only look for sell, no buy for me. I'm waiting for the price action. If I get a perfect price action, yeah, then I will start to look for sell. At the same time, I will wait until price close below this constant crossman. Until that area, I will wait. Okay, this is the last parallel gap. Price closed below this constant crossman. Everything is perfect. Everything is perfect until now. I am looking for sell. Yeah, it is supporting my idea. I'm just not interested to push my button right now. I will wait. I'll just wait. Okay. I'm not thinking that market is going to fall right now. Trust me, I'm not thinking right now that market is going to fall. All I'm saying that, can it fall? Can it fall? Can it tell me that I'm falling? If it doesn't tell me that I'm falling and come back again, close above this parallel gap, yeah, I'll be confidently I'll go for that buy until this buy sell liquidity. That means if it go higher now, closed above this daily parallel gap at the same time this 50-minute parallel gap, I'll start to look for buy. From which time frame? Best option is to wait until the 15-minute chart. 15-minute chart closed above this one. That is the best option. If I'm in rush, or if I see that something very peculiar from 1-minute chart, some kind of perfect setup from 1-minute chart, yeah, I'm not going to believe this 15-minute chart. Instead, I will look for the buy from 1-minute chart. I will look for that buy from 1-minute chart because market has taken the liquidity after 9:30. This is the 9:30. Okay, until now, did I get the first parallel gap? No, I didn't get the first parallel gap. So yeah, we will wait a little more. Okay, just a little more. Guys, push the like button. Can you please make sure that you have pushed the like button? I can see that near about 274 people are watching, but likes are really too low. Okay. Oh, by the way, today is the last day for Apex 80% discount. So if any of you are interested to take the account from Apex, I guess that you should grab that offer. That 150, 250, 300k just for $50, and $85 is the lifetime fee. So that's the best area. I hope if any of you are interested, please don't forget to use the code TWizard. It will go above. If I get any kind of perfect thing, that means perfect market structure shift or anything, I'll go for that buy. Right now I'm watching this parallel gap. Can it hold the price or not? Here, this one, can it hold it or not? This small portion is open. Let me change the color, and This is still open. Okay, the new, I mean, opening gap, this is still open. Can it hold the price, send it lower again? Closed below this candle, I'll took sell from that order block. If it can close below this candle, I'll go for sell from that specific candle because I am looking for sell. All I need to see, can it close below this candle? One tick below this candle, I'm going to take that sell. If it doesn't take me with him, I'm not going to cry because I know that I'm going to get another opportunity to take sell. By the way, let me check actually how much is going to be my stop loss. I should put my stop loss over there. It's 28 handle. What can I do? Should I go for that? Should I go for that? Or market is not going to give me the chance. It's okay. There is my market structure shift here. This is my market structure shift. Fair value gap. Trade that fair value gap. I'll take that sell. If it can make a fair value gap, tap to this fair value gap, I'll take that sell. My stop loss is going to cover the fair value gap only. Did I miss anything? Yeah, I just missed one thing. That is, this constant constant is holding the price. I'll take that risk. You have to understand this part. It is respecting this 50% of that daily fair value gap, but I will take that risk. I will take that risk. Okay. If you don't want to take that risk, don't push the button. Wait until this is broken. But I will take that risk. From there, stop loss is going to be here, 20 handle. Oh man, if it doesn't give me the opportunity, I'm not going to take that into. Oh man. Okay. It has broken this 50% already, but no opportunity for me to take the entry. It's okay. I know that I'll get another opportunity. Let's wait. Let's wait. Market structure shift, fair value gap. I'm not interested to push my button from fair value gap, but if it can make another fair value, I mean, if it can trade that fair value gap, then make an order block, yeah, then I will go for that sell. Why? Because market has already, I mean, you see how far it has reached already. So if it trade that fair value gap within 3 candle, I will wait for the what to say, I mean, some kind of order block to take my sell. The way I was waiting here. So if it could take me, if it could touch until that low, I would go for that sell. If it is not going too far, tap to this fair value gap, I would go for that sell. It went too far. Okay, so I will wait. If it can trade this fair value gap, then can make a order block. I will go for that order block entry, not the fair value gap entry 22 YT model. Not for that because it has already went too far from there to there, too far. So I will wait for the order block entry. Okay. Oh, by the way, this is the first fair value gap. Thank you, brother. Who is that? Jilahi. Thank you, brother, for reminding me that. Thank you so much. Let me mark it. This is the first parallel gap after 9:30. Okay. So yeah, I'm not going to push my button from that first parallel gap after 9:30. I will wait to see if it can make a order block. Look for sell. If it keep falling, don't worry. Today trend is my friend. So I will get thousands another opportunity to take sell or buy whatever it is going to be happen. Don't rush. 1, 2, 3. This is the third candle that should trade that parallel gap. Either way, if even if I wanted to take sell from there, I would wait for this candle. Can it trade this parallel gap or not? So let me actually mark it. I'm not going to take it, but I'm just going to mark it. And stop loss should be here. Still, this is 25 candle. I'm just not interested. Okay, so over there. Look, I'm not going to push my button over here. I'm waiting to see if it can make a order block. If it doesn't make a order block, I'm not going to take the sell. Again, why? Market left from there to there. Too far. It went too far. So I'm not going to leave this price action anymore. So I'm waiting to see if it can make a order block around that area. Give me that entry opportunity. So you have to understand the distance, how far market has reached. Is it falling? If it is falling, I will get an opportunity to take sell from that order block. Until now, this is the highest up close body close candle, which is my order block. So if it can close below this order block, I'm going to take my entry from that below that order block. Yes, brother, it is important, but I'm seeing this is broken. This constant encroachment is broken. Of that bullish parallel gap, the constant encroachment is broken. One candle, two candle, three candle. Below this constant encroachment, I have three candles, so it's broken. Here was two candle only, okay, but now this is broken. It will close below this candle. I'll take my sell over there. Okay, just little bit, little bit, little bit. Don't ah. I was talking to you guys, okay, so I just missed it. It closed and tapped to this order block. I just missed because I was talking to you. Oh, it didn't tap, okay, it didn't tap, but it was very near to this order block. I would go for that trade 100%. So from there, stop loss was going to cover the mid threshold of that order block. Would love to hold this trade until this low. Take a partial over here. See this parallel gap and that parallel gap. I would take a partial over here and that area. And that area would be my partial there. But this time, if it go higher, then I'm going to take sell, and my stop loss is going to be little above here. This is my entry. This is my target profit. Remember, my stop loss is too tight, okay? I'm not interested to put my stop loss over there above the order block. But where should I put my stop loss? Above the order block. I'm just not interested to put it over there. I'll put it above the mid threshold of that order block. If I get stopped out over here, I'll get stopped out. I'll try to look for re-entry. I'll look for re-entry, but I'm not interested to put my stop loss above that area, above that order block. So I'll keep it over there around that area. I'm just not interested to put it over there. That's all. Tap to this 50% of that bullish parallel gap, of that fast parallel gap. Remember, this should be the order, I mean stop loss should be above this order block. I just don't want to put it over there. That's why I got a stopped out over here above the min threshold. I would love to show you the way I trade, because in my opinion, if I get a stopped out over here, I'll be very happy to get a stopped out with a small stop loss over here around that area, 19 or 20, something like that. I'm not interested to hold my trade until this 38 handle, because two opportunity I will get by one stop out. It reached until this constant encroachment. This is the reaction. Send it until this first parallel gap after 9:30. The first parallel gap reached until that area. Should it fall? Can it fall now? It should fall. If it keep going higher and closed above this parallel gap, I'll go for that buy. But at the same time, it should keep falling. It should keep falling. That should be the stop loss, by the way. I'm not waiting for that order block. I will go for the sell if it can close below this parallel gap. If it can close below this parallel gap, I'll go for sell again. This parallel gap. Let me remove it. If it keep going higher, I'm not interested to look for buy until this parallel gap is not broken. When this parallel gap will be broken, yeah, I'll go for that buy. Until then, I'm not interested to look for buy. It will close below this parallel gap. I'll go for sell again from this parallel gap. closed here, I'll take sell again. Perfect setup? Absolutely not. And my stop loss is going to be above this fair value gap, just above that fair value gap, just above this fair value gap, not above even this candle, just above this fair value gap, maybe one tick above. Okay, something like that. Yeah, yeah. Not going to work. Okay, then I'm done until perfect price action, some kind of perfect setup. This all the possibility probable trade. It should not breach this fair value gap now. This fair value gap should not be breached. If it is breached, I will wait for the perfect setup. You wanna look for the perfect setup, wait for the perfect setup. I'm not here just to look for the perfect setup, wait for the perfect setup. I'll go every kind of opportunity and everything. I will try to explain the price action every time. This is the fair value gap that should not be breached. Why? This order block, see this order block, it has been broken over here because market reached until this first fair value gap after 9:30. Then market fall again and went through this bullish fair value gap. This is the bullish fair value gap that should not be broken. It has been broken over there. Come back again to this bullish fair value gap. It should hold the price, send it lower again. How far? At least until this fair value gap 50%. This fair value gap 50%. I mean, sorry, not 50%, until this fair value gap low. It would love to keep going higher. I'll get stopped out. I will wait for the perfect setup. I'm not interested here to show you the perfect entry. I mean, just look for the perfect entry. I will keep telling you the price action. Remember the order block entry? What did I say? Your stop loss has to be above that high, above that order block high. Did I get stopped out? If I put it over there, no. I don't like to put my stop loss above that far because if I take 20 handle, maybe just 20 handle is stop loss, no worries. But if I put it over there, that is gonna be 38 handle. I'm not interested to take 38 handle in that one losing trade. If I'm wrong, I'll get to a 38 handle loss. I'm not interested to take that 38 handle loss by one trade. I will take two trade by that one loss. So here I got a 20 handle loss. I'll go for that another opportunity to look for sell. From there to there, this is 33 handle, so my 19 handle loss has been finished. My stop loss is going to be there, look, above this constant encroachment, not at the break even. No brother, you can be stopped out, I can be stopped out, and I can take that loss. I will go for that loss, I don't care about that. I'll actually, where is my target? Remember the 50% of that week, that is my target. Here the 50% of that week, what should you look for? Fair value gap that should be unfilled. Where is your unfilled fair value gap? There is your unfilled fair value gap. When after this candle, the very next candle will close. After this candle, the very next candle will close. Then and only then your stop loss is safe above this unfilled fair value gap. Until then, your stop loss should be above this constant encroachment. See this fair value gap? Above this fair value gap, constant encroachment. Why? Because market can come back again to tap to this low. See this fair value gap, it can come back again to trade until the low. But brother, you will take a loss if you are wrong. I will take that loss with so much happiness. I will go for that loss. So this is the fair value gap until now. If it doesn't make the unfilled fair value gap, then obviously, okay, there you go. There is your unfilled fair value. This fair value gap should be unfilled. If it is unfilled by this specific candle, my stop loss is safe above this fair value gap. Remember. If it is closed, my stop loss should be above this constant encroachment of that fair value gap because it can come back again to the low of this fair value gap. I am not interested to get stopped out prematurely. Instead, I will take small losses over there. See this losses? I will take that losses because I'm trying to catch the huge run that I don't like. Okay, it is closed perfectly, so I'm going to remove it. Where did it came? To the low of this fair value gap. Perfect. It should it should go dramatically now. Why? Because this last fair value gap is holding the price. See this last fair value gap from 1 minute chart? It is holding the price. Is it actually going to break this fair value gap? I don't know. That's why I need immediate reaction from that low. Immediate reaction. That means market is going to boom, something like that. If it started to consolidate, something like that, either I will close my trade or my stop loss will be at the break even. If it started to consolidate, if it just boom, something like that, perfect. I'm going to hold my trade until this area, and my stop loss is going to be the break even because market doesn't need to come back again to the low of this fair value gap. Okay, I hope that I have explained everything. So when you will start to judge, make sure that you are judging me after whatever I told you. After that you are going to judge. This is my trading style. I don't like to put my stop loss above this order block. You want to put it over there, please go for that, because I know if I'm wrong, I'm going to get 3800 loss. I don't like that 3800 loss. I got 2000 loss. I will be able to mitigate my 2000 loss with confidence. With confidence. This candle is cool. I mean, until now this candle is cool. Okay, not some kind of Mickey Mouse move. I'm happy to see this candle, but still I want some kind of boom, something like that. It doesn't need to come back again to the low of this fair value gap. It should keep falling, go through this fair value gap, because this is the last fair value gap. If within this candle or the next candle market fail to close below this fair value gap, I'm going to either close my trade or I'm going to put my stop loss to the break even, because the last fair value gap is holding. It should be broken, either this candle or the next candle. If it failed to close below this fair value gap, I am going to either close my trade or I have to put my stop loss to the break even, because the last fair value gap is holding the price. So let's wait. This candle has 22 second or 21 second, something like that. Then I will wait for the next candle. Can it close below this fair value gap? Look at the reaction from this last fair value gap from 1 minute chart. Is it holding the price or is it wait to this fair value gap? Brother, time to learn the price action. And for explaining the price action, I have to push my button, because then and only then I'll be able to explain the price action. This candle should be closed below this fair value gap. I don't like this type of Mickey Mouse move. It has to close below this fair value gap if it wants to keep falling. Remember this candle. Why? One candle has traded this fair value gap low. Next candle fall perfectly. I am happy with that. The very next candle trade this fair value gap. Respect that fair value gap. This candle should not respect this fair value gap. At least it has to close below this constant crossment. If it doesn't do that, my stop loss will be to the break even, or I have to close my trade. So this candle is going to decide what I'm going to do. Three, two, one. Okay, my stop loss is at the break even. If it go higher and stop me out, I'll be happy, because this last fair value gap is holding the price. I'm now risk free. It has traded the low of this fair value gap. Perfect. It is now respecting this last fair value gap. It can keep going higher now. Can keep going higher. I just don't want to. Somebody has taken the membership. Who is that? Frog dog. Hey frog. Thank you, brother. Don't forget to give me the penguin. You wanna come back again? Close me, stop me out. I'll be stopped out with very happiness. Until here, it is 32 handle. From there to there, it is 51 handle. Did I close it over there? No. Why? Because you guys like the runner, right? Runner. You guys like the runner. So from there to there. Is it a runner? 94 handle. Is it a runner? Is it a runner? Oh, actually, I should not put it over there, but yeah, as I am looking for that runner, let him run for this runner. This is the last fair value gap. Price is struggling to break this last fair value gap. Okay, if it is broken, remember this constant and constant, exactly not constant and constant, little above. Okay, little above the constant and constant, little above. It will close below this last fair value gap. My stop loss is going to be above that high. See this high, above that high. If it can close below this fair value gap, below that fair value gap, Not this one, okay, this one. I hope that it will close. So I actually put my stop loss already over there. It is safe over here. It is safe over here. Why? First PDRA, last parabolic gap. What is that parabolic gap? Remember I talked about this parabolic gap. This is the highly probable trade opportunity. Here, there should be a stop loss. Just one tick above this parabolic gap. If you don't get stopped out over here, your risk to reward ratio is going to blow your mind. This is the last parabolic gap, which should use as an inversion parabolic gap. But remember, this is 50-50. That's why your stop loss has to be very, 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 very tight. If there is a water block above this parabolic gap, cover that water block. If there is